Hey traders, Jason from Leavitt Brothers. Happy Tuesday. Today I'm going to do an update of my State of the Market series, but before I get started, I'm excited to announce my free mini masterclass in trading is live. In the class, I talk about the essence of good trading, which is not what you think. I talk about where alpha comes from, where the big movers can be found, and why you need to be in those groups and stocks if you want to outperform the market by a large margin. Then I discuss the nuts and bolts of market analysis and group strength. If you're a beginner, the class will get you on the right track, get you started on the right track. It'll save you thousands of dollars in losses and a heck of a lot of time. Okay, it'll really speed up your learning curve, put you on the right track, get you in the right direction. If you're beyond the beginner stage, whether you want to cross that threshold to really making it, or if you're a pro that's still curious about another perspective, there are a lot of nuggets in there that will really get you thinking. So there's a link below the video. Check it out. It's free. Now on to today's video. All right, so I'm going to go through a lot of the breadth indicators and just get a state of what's going on. So here's the SP 500 up top. Below we have the 10-day NYSE 80 line, and below that we have the cumulative line. So focusing first on the cumulative line, we have higher highs, higher lows. Trend is up. It's strong. We hit a new high recently. I see no warnings here. Okay, this supports the overall market, its strength, and it very likely points to the market continuing. Okay, we don't tend to run into trouble until we get a divergence like you saw here back last September, where the market pushed higher a couple times and the AD line pushed lower, and you can see the market was pretty much at its all-time high here, and yet the AD line was had already been dropping for an entire month and had put in a couple lower highs and lower lows. Okay, so obviously that's not happening. We're not in danger of that right now. So all looks good here as far as the overall trend. Now, if you focus more on the 10-day, which gives you more of a near to intermediate term picture, divergences at a high level aren't too meaningful, but divergences that go down to zero tend to result in a pullback. Okay, so we got divergence there, we got divergence here down to zero while the market was pushing higher. Okay, and of course this was like a really quick drop, even though the market was still kind of up here. Okay, we're starting to get that now. Okay, we're getting a divergence is fine. They can last for a couple weeks, but it's starting to get close to zero, which means it's put up or shut up time for the bulls. Okay, they've been doing well. Obviously the market's been pressing higher, but for some reason the advancers and decliners they're nearly equal. Okay, so we need the bulls to step up here, or else we're probably going to get a little bit of a correction. Okay, for now I would treat any correction like a pullback with an uptrend. I think it'll be a buying opportunity. That remains to be seen, but for now, long term, per the AD line here, everything's great. Shorter term, starting to see a little bit of softness that we got to be aware of. All right, here's the AD line for each market cap. So the large cap line, higher highs, higher lows, doing great. Mid cap line, trending up. Small cap line, trending up. New highs all hit in the last week or so with all of them. So there are no warnings here. It's not like we're getting a new high. It's not like the large caps are doing great, but the small caps are hinting at weakness. Everything looks great here. Fully supports the market's overall trend. Now we have the Nasdaq with the Nasdaq 80 line and the Nasdaq 10-day 80 line. All right, so down below first, we have, this is just the AD line, AD volume line, higher highs, higher lows. We got a new high very recently. So again, like the AD line, this fully supports the overall strength, the overall health, the overall market. The trend is in good shape, and there are no signs that it's weakening. We don't tend to get into trouble until you get a little bit of a divergence, or in this case, like flat trading. You can see how here the market was up near its high over here. This was at a high, but then it flattened out, didn't really go anywhere, and then it only took a little bit of a move down, and like boom, this thing was below the 50 and below previous lows from back here. Okay, so we're not in danger of that right now. This thing has a nice buffer to work with. It could drop quite a little bit before it even gets down to a trend line. So this chart says market's in good shape, and even if we do get a pullback in the near term, the pullback should get bought. Now looking in the middle, similar to the last chart, divergences tend to lead to pullbacks. So you get a divergence here down to zero, divergence here down to zero, Quick move down here, and you can see like that, like those line up pretty good. So this thing was crossing 0 right here, and the index was still near its high. So right now it's holding up pretty well. Okay, divergence isn't really, I mean, you're getting a divergence because it's flat. It's not a huge divergence. So if this thing comes down to 0, the bulls are going to have to step up. Otherwise, we're going to get a little bit of a pullback here. Okay, so long term things look great. Short term things look good. We'll have to see what happens here. All right, next chart. This is the 80 volume line per market cap. So large cap, mid cap, small cap. This one's a little bit different than the 80 line. So large cap, higher highs, higher lows, trending up really nicely. But the mid cap line has been channeling down, and the small cap line has been channeling down. And in both cases, they are they're near resistance. You can see we got a higher high here, which is notable, or a higher low here, which is notable. So the bulls are going to have to kind of step up here. Okay. So for whatever reason, not this rally. That's not the S&P chart. But for whatever reason, each successive rally has come with a smaller print here from the 80 volume lines with the small caps and mid caps. Okay, slightly less participation. It's a little bit of a warning. We're going to want to see both these lines, break out and negate these downward channels. Okay, it's a little bit of a warning. It's something to pay attention to. Large cap line doing great because Microsoft's up. Apple's up. Google's doing pretty well. A lot of big cap stocks are doing well. But evidently some of the smaller caps are not doing as well. So it's something to keep an eye on. All right, so we got new highs here, S&P versus new highs. To reiterate what I've said a lot of times is that what we want steady prints somewhere in the middle. Okay, up, down, up, down. That's perfect. We don't need too high, too low. Just somewhere in the middle, steady prints is exactly what we want. This is what we've been getting. We got a little bit of a low print down here, but it quickly righted itself. We got some high prints, over the last couple weeks. That helps, keep momentum going. So per this chart, I think things are good. Maybe the high print here, the 10-day is starting to roll over. I don't know. It's gonna, you tend to get divergences needed to persist for 2 to 4 weeks before they actually play a role. So you have this divergence here trended down while the market was trending up, but that lasted 4 or 5 weeks before it actually brought the market down. You have new highs trending down here, again, an entire month before they had any type of influence. Here we had trending down here before we had a little air pocket hit. So even if this thing rolls over, it's going to take a couple weeks for it to really, do some internal damage. So as of right now, things look good. The trend is, fully supported. All right, last chart. S&P 500 up top, percentage of S&P stocks above their 50-day moving average down below. So the 50% line is pretty important. Okay, when the market's doing well, you get more than 50% of the stocks above their 50-day moving average. When the market weakens, you get prints down below. Okay, like this. Okay, prints at moderate levels below tend to be pullbacks within uptrends, but when you get a bigger drops below, that's when you get something that's more like not a full-blown downtrend, but you get a much bigger move to the downtrend instead of just a pullback with an uptrend. So far it's not happening. We get pretty decent print above 50%. But what I want to point out is the divergence that has been playing out. So let's see here. So market trended up, here, and S&P up here, but then the percentage of stocks in the S&P above their 50% was dropping. Okay, so that eventually moved. That led to a pullback. Similar situation here. Percentage of stocks declined as the market moved up. So we're getting a divergence here too. Okay, less stocks are participating, and it's most notable when you look at it from the perspective of this move here had, right here about 75% of the stocks above their 50-day moving average. This move here, which has lasted longer and gone further, is only resulting in 70%. So that's 5% less stocks. 5% times the S&P 500 is like 25 stocks. There's 25 stocks less stocks, and actually we're not at 70% here. Now we're all down at 66%. So we're talking like 30 or 40 less stocks are above their 50-day moving average than the previous rally. So less stocks are participating. It's something to keep an eye on. We're going to want this thing to come up here, make a higher, take out that high, at least match the high from over here, preferably take it out and kind of reset the clock at zero. Because if we keep getting less and less stocks, eventually that internal weakness is going to pull the market down. Okay, a divergence can persist for a month, 2 months in this case. Okay, so it's not like anything is imminent right now, but it's something to keep an eye on going forward. Okay, so to repeat what I said last week, my overall analysis is the same. The market is doing great. It's strong. It's healthy. The trend is up. I'm fully on board with the market, not just heading higher, but heading much higher. In the near term, there's a little bit of softness building. If we get a correction, in my eyes, it'll be a buying opportunity, not a reason to panic and sell. Okay, thanks for listening. Go check out my free masterclass at the link below. All right, thanks, and I'll see you next time.